Hello and welcome back to Explain the Charts. Today we're tackling the EURUSD and we'll be combining the latest market news with a thorough chart analysis to give you a comprehensive outlook. Starting with the big picture, the daily chart showcases a clear uptrend in EURUSD throughout November 2024, with a notable surge around mid-November. This could be attributed to various factors, such as positive economic indicators and geopolitical stability affecting the Eurozone. We can observe several higher highs and higher lows that firmly support this bullish trend. However, as we examine the more recent price action, we can notice some signs of potential consolidation or a temporary reversal. The one-day chart displays some lower highs and higher lows starting in early December, suggesting a possible pause before another upward movement. A closer look at volume data within these price ranges will provide additional insight into this trend. Let's now shift our focus to the one-hour chart to dissect these recent developments. We can observe some indecision in the market, with price fluctuating around a relatively tight range. While there's no clear sign of a major trend reversal, the lack of strong momentum is evident on the shorter time frame. Zooming into a specific range, let's examine the period between 1696982400000 and 1696992400000 on the one-hour chart. During this time frame, the EURUSD experienced a period of heightened volatility, likely caused by the release of important economic data or news reports. This would suggest a degree of market sensitivity to current events. The 15-minute chart provides further granularity. Here, we're able to pinpoint support and resistance levels more accurately and to observe the short-term fluctuations that create such volatility in the market. Examining the wicks of the candles can reveal crucial information on buyer and seller pressure. Returning to the daily chart, we see a potential support level around 1.05. A break below this level could signal a more significant correction. However, the 1.07 mark stands as a strong resistance level. A decisive break above it could trigger another bullish wave. The overall trend of the EURUSD remains upward, and these short-term fluctuations are quite common in forex trading. The likelihood of a short-term correction to the 1.05 support level is relatively high given the current consolidation. A break below this level, reinforced by high volume, would drastically increase the chances of such a correction. Conversely, a break above the 1.07 resistance, with significant buying volume, will make a further bullish movement much more likely. In the coming days, it is vital to monitor the reaction of the market around the 1.05 and 1.07 key price levels. Economic news releases and any announcements from the European Central Bank, ECB, or the Federal Reserve, Fed, will likely exert considerable influence on price movements. Keep an eye on the volume to confirm breakouts and remain vigilant for shifts in momentum. That concludes our comprehensive analysis of the EURUSD. Remember, this is not financial advice. Always conduct your own research and risk management before making any trading decisions. Thank you for joining Explain the Charts. Please like and subscribe.